Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about FIREFLY AEROSPACE INC quarterly report. FIREFLY AEROSPACE Inc. provides a range of businesses and services to its customers. These include Integrated Launch and Space Services Technology Alpha, a responsive small launch service Eclipse, a medium-lift launch vehicle Blue Ghost, a lunar delivery and operation service Elytra, space maneuverability and servicing Ocula, a lunar imaging service. These services cater to national security, government, and commercial customers. The FIREFLY AEROSPACE Inc. NASDAQ FLY stock price has dropped by over 28.18% since its IPO in August 2025 due to a combination of factors. The company's second quarter earnings report, released on September 22, 2025, was particularly significant in contributing to the decline. Key issues included a wider-than-expected loss per share of -$6.78 and missed revenue estimates of $15.55 million, which fell short of Wall Street's expectations of $16.82 million or $17.25 million. These disappointing results led to an immediate drop in stock price, with shares tumbling 6.3% in after-hours trading on September 22, 2025, and another 11% the following day. The primary drivers of revenue growth or decline are largely influenced by customer demand, contract structures, and government budget allocations. Revenue growth is primarily driven by strong customer demand, multi-launch agreements, efficient contract structures, and growing space market demand. The company's ability to execute on fixed firm price contracts and milestone-based billing also contributes to revenue growth. Additionally, the award of significant contracts such as Blue Ghost mission, 4 by NASA, and government budget projections further support revenue growth. On the other hand, revenue decline is primarily attributed to normal fluctuations in activity within spacecraft solutions and one-time mission revenues. Negative cash flows from operations also contribute to revenue decline. Net income and profit margin changes. A decline in performance. The financial performance of a company has experienced a decline from 2024 to 2025. Net income decreased by $10,325, 19.3%, during this period. This significant drop can be attributed to increased costs and expenses that have negatively impacted profit margins. A closer examination reveals that the decrease in net income is not solely due to a reduction in revenue, but rather a result of higher operational costs. As a consequence, profit margins have also suffered, leading to a decline in overall financial performance. The company's financial performance indicates a concerning trend. Despite its efforts, the business is currently experiencing negative operating cash flow. This means that the company is not generating enough revenue to cover its operational expenses, resulting in a net outflow of cash from its core activities. As stated on page 42, this issue warrants closer examination and potential adjustments to ensure long-term financial stability. The company's debt level has undergone significant changes over the past year. Initially, the term loans as of June 30, 2025 stood at $136.1 million, with no change from December 31, 2024. However, after the IPO on August 8, 2025, the debt was repaid in full to $148.4 million. Following this, a new revolving credit agreement was established, increasing the debt level to $125 million. In terms of interest expenses, there is conflicting information across different pages. However, based on the most consistent data, it appears that interest expenses have increased significantly in 2025 compared to 2024. The net interest expense for 2025 stood at $5,237 million, a 40% increase from 2024's $3,738 million. This trend is also reflected in the second quarter of 2025, where interest expenses increased by $1.5 million, 40%, compared to the same period in 2024. Overall, while there are discrepancies in the data, it is clear that both debt level and interest expenses have changed significantly over the past year. Management is optimistic about the company's outlook, citing several key points. The company is well-positioned to serve customers' complex missions with rapid response times and purpose-built solutions. It expects annual missions to the moon with its Blue Ghost lander and is capitalizing on growth in the space market. The company's scale and unique blueprint will support increasing launch cadence, while growth in backlog is a key measure of business growth and future prospects. Expansion at various launch sites, including Cape Canaveral Space Force Station in Florida, will also drive revenue growth. Management notes that continued growth depends on government spending and private investment in the space economy. However, it expects to improve profit margins and scale the business through cost reduction and increased production volumes. The company's ability to generate sufficient liquidity from ongoing operations and capital markets transactions will enable continued business operations. With adequate cash reserves, management is confident about the company's future prospects. The company's financial summary reveals a consistent pattern of paying dividends. Specifically, it is mentioned on multiple occasions across various pages, 5, 31, and 44, that the company has indeed paid dividends to its preferred stockholders. In contrast, there is no indication of share buybacks in any of the provided summaries. That concludes the financial summary for FIREFLY Aerospace Inc. Feel free to comment below, and I will be happy to answer them when possible.